Hi guys, welcome to honeystocks.com video today, which as you can see is based upon sector rotation. The reason I wanted to kind of get this one out there is I've had so many emails today, messages, just regarding the huge drop that we've seen across the board with many of the momentum stocks that have obviously performed very, very well over the last 12 months. Cloud, tech taking a bit of a Mike Tyson style beat down. So hopefully this just helps somebody somewhere out there. I like to use a lot of logic with my analysis, and hopefully this gives you some insight and will also give you a few pointers on where you can maybe look in the market just moving forward in at least the short to medium term. So as always, before we get into this, just please pause the video and obviously make sure you are comfortable with that. I'm also registered with the CMT Association. I'm currently working my way towards my chartered status at the moment, so technical analysis is my thing. So where I really want to start is this here. Now, this is maybe a concept that's new to many of you, but September has a very rough reputation dating back to 1950. You know, over the last 70 years, this is how September has performed, and that is amazing to me. And what it really says, it doesn't mean, necessarily that we are going to see September declines, because actually over the last 10 years it looks anything but this chart here. But what it does say to us is that on the balance of probability over the last 70 years, we can expect September to decline. Now, I'll maybe get into this in a deeper sense later in the week, but that's something that we need to be aware of. Okay, now what I would say is, if you enjoy this video, please subscribe to our channel. Let me know in the comments what you think. If there's anything that you feel like is a counter to any of the points or any of the charts that I'm about to walk through with you, then feel free, throw them at me. But where I really want to start is the S&P 500 equal weighted index. Now, what you will see with most of the charts, I'm constantly identifying where the danger zones are. I think you always have to ask yourself, what if I'm wrong? And this is an approach that serves me very, very well. But what I want to draw your attention to here is the weekly chart. Now, we're obviously Monday. Monday has just completed. We're just at the end of the 9th of September. And with the massive declines that we've had in the market, or what are perceived to be massive declines in the market, isn't actually a decline at all. With the equal weighted index, we can quite clearly see we've started off the week positive. Now, this is the weekly candle. Now, what that says to me, and obviously technical analysis is my thing, what it says to me is that we are just simply seeing a redistribution of capital, and we're seeing money flow out of one area and moving into another area. Now, this is common sense to me. This is very, very logical. And what it's really saying to me is that we're really looking to identify the areas that the money is moving to. Now, I just want to draw your attention to a couple of charts and why technical analysis is always my preferred approach. I do use a little bit of fundamental analysis, but it really, technical analysis tells us when we need to get a little bit defensive. As we can see here, as soon as this support level broke, obviously Okta fell off a cliff. Trade Desk, my chart at the weekend, actually identified this as a problem, and we've obviously had huge declines. Now, I've mapped out on a few of these charts where we can hopefully expect to get a bit of support. If you're out there and you've maybe come through on one of my social media channels, maybe through a stock Twitch feed or something, and you're holding some of these stocks, I have absolute complete sympathy for you. I'm not here to say this is what you should have done, or this is how you can play. I understand that the market rewards independent thinking, and I think for those of you out there that are caught in poor positions, I think I just want to highlight to you maybe just how you can use the technical analysis to aid your decision making. Many of the guys that I work with use a combination of fundamentals, and they use technicals to support the fundamental view. It's a combination that works very, very well. But obviously, hindsight's wonderful, but it's identifying these areas in advance. Obviously, Trade Desk falling off a cliff. I think Twilio, I think it's good night for a little while for Twilio. Absolutely, I hope all these stocks rebound tomorrow. I have no position in any of them, but I think what we're seeing at the moment is we're just seeing a redistribution of capital. We're seeing big drops in one area, and that money is being distributed to other areas, which I will walk you through some charts that I feel like you should be watching. Viva Systems. This was actually a chart on Friday. I was talking, with one of my guys about this, where, we could maybe look to take an entry here and take it to the top. He countered my view with a potential head and shoulders pattern, and that is the thesis that has proven to be correct. So again, we're just mapping out where potential support areas are. MDB, yes, we hit the danger zone. Looks like we've come and we've tested the 200-day simple moving average, which is a logical area of support. I think if we break below that level, I think we're then looking for a gap fill before potential support is found. But I think with a stock like MDB, I understand that, during this move here, it's an incredibly profitable stock. Many of you will have benefited from that move. But then when you look at the chart, it doesn't become appealing. And this is where trend following really comes in, because trend following just allows you to go in, you hold the position for weeks to months, and you just stay in the stock for as long as it's paying you. As soon as the stock no longer is paying you a profit, all you're simply doing is removing your risk from the equation and reallocating that risk elsewhere to another stock that will go on and do the same thing for you. I don't see much point in holding on to a stock and being married to it unless it's paying you, incredible dividends, and that's the reason that you're holding the position. I completely understand that, but MDB, those of you that are holding, again, hopefully it pays off, and we get a monster bounce to the upside. But I do suspect we're seeing a move into other areas by the big money, similar to what we've seen with semiconductors last year. Again, AYX has been incredible for the last few months. Again, this was the area, you should always be mindful of what's going on. Now, in saying that, there are some stocks that have held up very, very well in the last 24 hours, and they're really stocks that you would expect to hold up. I think Microsoft is obviously top performer, heavily correlated obviously with the tech indices. But again, we've got the defensive zone, that's not been breached, and we're just a whisker away from all-time highs here. So I think if you do want exposure to tech, and you want exposure to companies that, especially in an environment where we are kind of chopping sideways at the moment a little bit, if you want a little bit of safety, I think Microsoft represents that. I think Apple also represents that. I can see that we've recently broken out above this level. It's had a reasonably good day today, so hopefully Apple starts to move. When we see the big money flow out of areas of the market, you can expect usually I use that word with a lot of reluctance, but because, we can quite clearly see here that when we had a bit of a correction, Apple fell as well. But we're not dealing with a correction, we're just dealing with a redistribution. And with that, the money is not flowing out of Apple, and because Apple's holding up, I would be looking towards the safety. Adobe is given a little bit of a concern at the moment. We are not really doing much. It's chopping sideways at the moment. In actual fact, I mean, we could probably justify that there. And I would be very, very mindful of this if I was in Adobe. Something else, you know, this is obviously very loose here, but yeah, there's a chart pattern forming. And yeah, I think if you're in Adobe at the moment, I think, you know, that there should be a fair bit of caution there. I think if you get the break to the upside, you know, absolutely no problems, but I think any break to the downside wouldn't really be good news. SPLK actually held up reasonably well today. It's probably not a position I would personally like to take, but it is a stock that a couple of you have messaged and emailed me about, and I just wanted to highlight this because I think it's very, very clear where the defensive area is. The fact that it's held up okay today is probably representative of the decline that we've seen recently. I mean, if we have a look at how it's done, you know, we're down, you know, 23-24%. So that's holding up okay, but again, I'd just be very, very mindful out there, guys. Square Inc, probably the one stock I get messaged about more often than not. It rebounded in reasonably spectacular fashion today, so that there is a bit of support there for Square Inc. I think a break below that, there's a very clear 17% downside, and you know, I think a break to the upside here probably wouldn't be a bad thing. But I think, in all honesty, I think Square Inc, although it's a stock that served me very, very well in the past, again, I'm not looking to marry these stocks. I'm only dating them, and I think there are absolutely better options out there now. Obviously, sector rotation. Now, just to quote a phrase that I've seen banded about in the last couple of hours, and that it's the lifeblood of any bull market, and it is absolutely the case. You know, when we had, you know, the rotation out of semiconductors last year, we know that many of the semiconductor companies lost 50, 60, 70% of their value in the space of a couple of months. Now, what we're seeing at the moment, and I've highlighted the XLF here because financials have obviously been performing pretty well over the last couple of weeks. Now, when we look at stocks like Goldman Sachs, now Goldman Sachs has got a very clear support level in play here, and it's not been breached yet. So what we're seeing here is we're seeing a slow, steady, gradual rise in the stocks that are aligned with the sectors that are moving. So with XLF, you could, you know, look to stocks Citibank, you know, Goldman Sachs, BlackRock, you know, the stocks that you would expect to perform well when financials are moving forward. The key is always to identify strength in the market. I don't see the point, if you want consistency, to be buying beaten down assets. I don't think that makes a lot of sense to me as a technical trend following trader. And we can quite clearly see with Goldman Sachs that we're putting in a series of higher lows. That's a characteristic of an uptrend. There's no debate about that. So then it becomes a game of, well, where can I find the best entry into the market that will provide me with the correct risk to reward ratios? You could be an absolute imbecile and, you know, pick an incorrect stock 4 times out of 5, but as long as you get that 1 out of 5 and you've got the correct risk to reward proposition, you'll be okay. And I think, you know, with what I do, I mean, I'm certainly looking to, you know, get 3 out of 5 correct, and you know, that's the game that we play. We're always going to get things wrong, but most of the time when we get it correct, when we get the optimal entries, it can get the trade off to a good start, and then generally speaking, you know, things will start to advance, and then it becomes a game of management, which is always what we want. Now, obviously touched on semiconductors. Now again, very similar to financials, where we're seeing a bit of a gradual rise in semiconductors. We're seeing support levels respected. Yes, we're always aware of the danger zones. But when we know that semiconductors are rising, again, we're looking for the strength. Where can we find and take advantage of these entries into the market? Nvidia has been incredible over the last few days for a few of my guys. It's obviously broken out of a chart pattern that you would expect it to move. Again, we're always mindful of where we should be looking to get defensive, blocking profits, re-engage the market with new entries, scaling in. The market is such a complex area, but technical analysis doesn't need to be made complex. I think if you're watching this video and you've stuck around this long, you'll understand that I've got an approach that's based upon simplicity. I hate complexity. I understand what works, what doesn't work, and obviously that's just through the knowledge that I've acquired. But absolutely, Nvidia is one of those stocks that I think you can probably look at if you feel semiconductors are starting to move. Now, over the last 7 days, I've provided my client group with 3 charts, 3 trade alerts that I want to share with you guys as well. Just for those of you that are maybe out there, you're maybe struggling a little bit, maybe you're fixated on the same stocks over and over, or maybe you just don't know where to look in the market. Maybe you're buying beaten down stocks, it's not working for you. Maybe you've got a fundamental approach and you keep getting beaten up. If any of these stocks meet your own trading rules, your trading plans, then they might be worth considering. But my guy's got an alert for Blackstone Group, and absolutely, it's off to a decent start. It's up a couple of percent in the last couple of days, and the expectation, as you can see there, is I've already mapped out where I want the trade to go. Will it get there? Who knows? But all we can do is take the technical entry into the market, understand where the danger zones are, and then it's a game of management. So Blackstone Group, I think, represents a decent risk to reward proposition. Weight Watchers, guys got an alert on this on I think it was Friday, but we're very much looking for this. I know that it moved 5 or 6% today, and I'm happy to give that up. I didn't need to jump in because I've already planned the trade. I'm really looking for price to break out above a key area of potential resistance. I think once it gets above that, I think there's a very clear risk to reward proposition being offered with Weight Watchers at the moment. Obviously, Opera's favourite company out there. And the other one that's off to a flying start is Western Union. Again, alert went out on this one, I think on Thursday. And again, it's off to a little bit of a flyer there. I think we're up a few percent on Western Union. Again, it's already mapped out. I know what the target is. I know where I want price to go to. But as you can see, I'm constantly evaluating where the danger zone is and where I might want to just cut the trade and just say, do you know what, I'm not taking any chances here. And that's really the approach that I've got to the market. And like I said before, if you're out there and you found value from this, then feel free to subscribe to our channel. We try to upload a couple of times a week, but if you are somebody out there that struggles a little bit, feel free to go and check out our website, honeystocks.com. We are, technical analysts. I think that would be the message to get out there. We deal with all facets of the technical market, just to give you an idea of some of the areas that we kind of cover. But we can't help everybody, unfortunately. I think if we, dissect it down, that this is really the people that we can help. If you've got a career in a bit or a business and you're trying to fit trading around it, or maybe you're trying to get away from day trading, I think those are generally the types of people that we can look to help. But thank you very much, I think, for watching. I think that's the final thing to say, and maybe I'll see you in the next video, or maybe I'll be speaking to you soon. Thanks for watching.